Hello, everyone. This is your market update for Thursday, May 22nd, 2025. Today, we're going to get initial claims expected at 230,000, as well as flash PMI for services and manufacturing, as well as existing home sales for April. Over to the charts, gold currently trading at $3,308. Price is kind of making an outside reversal day today. So we rallied above and below the prior day's range. Sometimes that can signal a short term top. We'll see what happens here. Really, we'd have to form a swing high, but otherwise, I think prices are probably just taking a breather, and that we'll see them roll over sometime later this month, and then make fresh lows into June. Silver currently trading at $32.95. Getting some alerts here on Treasuries. Silver also making an outside reversal day, trading above and below the prior day's range. Really, we'd have to complete a swing high here to tell me that this cycle may have peaked already, but I don't see any signs of that just yet. Platinum had a nice strong run, tested 1,085, currently at 1,077 here. We'll see if prices can continue above that 1,100 level. That would be significant. Otherwise, I think we're probably going to roll over here in the next week or so and maybe come back down to the lows of the range towards June. Gold miners GDX finished up yesterday 1.29%. Had a nice bounce here. We are 5 days into a new cycle. We filled this gap from earlier in the month, and we'll see what happens here with gold slightly lower. We could roll over here, but eventually, I think prices are going to drop to fresh lows here and take out the May low sometime in June. Over to the S&P 500, we finally got a swing high confirmed now. So we're still kind of tracking that 2022 bear market, and we'll see what happens if it continues to follow it. And it's been fairly close. Then we should see prices trend lower for the next probably 6 weeks into roughly the first week or two of July. Once we get below the 200-day moving average, we got a gap here around 5,700 that once we get below that, I'll feel more comfortable calling a significant top. But right now, we at least have a swing high and the initial stages of what could become a multi-week decline. Again, I don't know that we're going to break the April low. This rally was far stronger than I expected, but we'll see. If we get some good downside momentum here, it's possible we retest the April lows. And who knows, if we do enter a recession, then we could, I guess, make fresh lows later this year. Over to the Treasury market, starting with a 10-year, currently at 4.61%. This is the level where I thought if we got above 4.6%, this would initiate maybe a new uptrend in yields. And here we are. We'll see if we get some upside follow through. But at these levels, I think that's going to start to scare equity markets. Over to the 20-year, currently at 5.15%, making fresh highs. We are above the January high, and we're still a ways away from the high set in 2023 at 5.4%. But we're making our way that direction. And again, this is probably not a good sign for overall equities. I want to show you the TLT here. Prices aren't trading right now, but this is basically the 20-year proxy. And it looks like we're going to break support here at 83.50 today, I would imagine. And then the next final support level here is around 77.50. Anybody that has been buying the long bond or the TLT has just been getting destroyed. And then lastly, the 30-year Treasury. Here we are, 5.13%, working our way towards the high here of October of 2023 at 5.18%. We could possibly hit that today, but if we break through that and we break to fresh highs, I think the last time we were at these levels above 5.2% was in 2007. So that was quite a while ago, about 18 years. And we'll see if we get a breakout in the long bond here on the 30-year. Again, I think that's going to give the equity market some trouble. So that's it for now. Have yourself a wonderful day, and we'll talk to you later.